Hello, and welcome to today's National 8A Association webinar. The National 8A Association is a nonprofit organization with a mission to provide education and guidance for all aspiring, current, and graduate 8As. We are also proud to work with all types of small businesses, agencies, large primes, and industry professionals. Before we begin, I'd like to know that this webinar is being recorded and all presentation materials will be posted on our website. You can find that at www.national8aassociation.org. If you would like to ask a question throughout the presentation today, please use the Q&A and we will get to them or get to as many as we can today. I'd now like to introduce you to today's speaker, Shonna Burgoyne with NeoSystems. So please help me welcoming Shonna to discuss Budgeting 101 for 8A organizations and government contractors. Welcome. Thank you.
Thanks so much for that introduction. My name is Don Carnevale. I'm the marketing director at NeoSystems, and I'll be the host for today's webinar. Joining me shortly, as mentioned, will be Shonna Burgoyne, Vice President of Finance and Planning at NeoSystems. NeoSystems is proud to support the National 8A Association and its members through participation at conferences, developing relevant content, and presenting webinars such as this. Now let's take a quick look at our agenda for today. We'll begin by discussing the importance of a sound budgeting process, along with some common budgeting challenges facing 8A organizations and other government contractors. We'll then spend some time looking at some budgeting best practices that will be helpful to organizations of all sizes, along with tools that are available to help with the budgeting and planning process. We'll finish up with some key takeaways and advice for getting started with your budgeting process. Now let's get started. Shonna, it's good to see you and thanks for joining us today. Can you tell me why having a sound budgeting process is so important to an 8A organization or government contractor?
Sure, Don, and thank you all for having me. A budget acts like a financial roadmap for how a company expects to operate during the year. It's used to align financial resources and personnel to fulfill contractual obligations. In addition, budgets provide the necessary data and support for developing and submitting a provisional indirect rate proposal to the government, something I'm sure a lot of people on this call can relate to. Budgets also allow companies to analyze the potential impact of new work on indirect rates and make more competitive pricing decisions. A well-maintained budget facilitates easier and more successful audits by providing accurate and supported financial data.
Great. Thanks, Shonna. Now I can see why having a good budgeting process is so important. Can you discuss some of the common challenges that you've seen government contractors and 8A organizations face when trying to develop a budget?
Yeah, budgeting and planning in today's environment is probably more difficult than ever. We have inflation, supply chain challenges, interest rates, talent shortages, wars, fluctuating demand have all become business challenges. These changes have led to frequent and sometimes unexpected adjustments to projected budgets, growth plans, and assumptions for future investments. Finance executives and managers are no longer able to support increasingly complex planning scenarios with their status quo planning processes and tools, and they must reconsider their approach to support a more agile environment. Some common challenges that companies face are listed here on the screen. Most companies do not have a process that allows different organizations or project leaders to collaborate in real time on a budget. Their tools are inflexible and their plans are static and siloed. They have no way of integrating with their ERP or accounting system to bring in current project data or actual costs for quick and easy variance analysis. In addition, many government contractors and 8A businesses have complex allocation and cost pool structures that make budgeting very difficult.
So now that we've heard about those challenges, Shonna, what are some best practices that you would recommend for our audience?
Sure. It's important to start with a clear understanding of your company or organization's financial goals and assign ownership of specific budget segments to individuals or teams, promoting responsibility and accountability. With our government contracting clients, we find that they need to be able to budget a few different ways. First, they need to build a project budget that's going to drive their direct costs and their revenue. They want to enter budgets for detailed line items, things like travel or material costs on each project. And they also want to build up their direct labor costs by assigning hours or a percentage utilization by employee to each project that they are assigned. It's helpful when building your project budgets to utilize historical data as the foundation for budget information to improve your accuracy. And when the direct costs have been established, indirect costs for those projects can be calculated. Typically for GovCon, we're going to use your target or provisional rates to determine what those indirect costs are, and then calculate your profitability based on the contract type, whether it's T&M, cost plus, something like that. That data is going to be then aggregated into departmental or business unit budgets and then rolled up again into a company budget. So that way you can see it at a granular level, or then you can also see it at a company level.
So, Shonna, you mentioned that government contractors and aid organizations need to budget in a few different ways. You talked about direct project budgets. What other kinds of budgeting should they focus on?
Well, in addition to the direct project budgets, companies are also going to want to plan their indirect budgets. Things like fringe, overhead, R&D costs are a few examples. It's best practice to use driver-based modeling where costs are allocated based on the activities or drivers that cause them whenever that's possible. An example of that would be allocating, let's say, insurance expense based on a percentage of labor costs. I see a lot of companies that use an average of, say, the last 6 months of actual costs. They'll take a rolling average and apply that as a starting point for their indirect cost accounts, like their business meals or overhead costs. And most companies will want to plan indirect labor costs based on individuals, again, by the employee, assigned to specific orgs or departments using their salaries and building up to their cost from there. It's always important to factor in things such as an estimated raise percentage, the number of holidays or working days in a month when they're planning their labor expenses. And then once the indirect cost planning is complete, the direct and indirect costs can then be aggregated again into a budgeted income statement. Again, it's important to be able to break that data out into the departments or organizations, but also be able to roll it up into a company budget. Budgeted indirect rates, once that's done, can now be computed using the forecasted costs and then the respective pools and base accounts.
Are there any other best practices that we should be aware of, Shonna?
Another best practice that I think is extremely important is scenario planning. It's important to be able to have multiple versions of a forecast or a budget that allows planning for different scenarios to enable the business to quickly assess the impact of different decisions and adjust their plans accordingly. It's also important to continuously track your budget performance against your actual results to identify variances and then address areas that need attention. I would recommend scheduling regular budget reviews, typically quarterly, to assess your progress and identify issues, and then make any necessary adjustments. But be prepared to adapt the budget to changing market conditions and business needs.
Thanks for sharing those best practices and detailing how other companies plan their budgets, Shonna. Now, what should companies look for when choosing a budgeting tool?
That's a good question. It's important to choose a tool that's going to allow your users to enter the data accurately while maintaining one version of truth. It's common in budget models like Excel to end up with several different versions that can be difficult to maintain and consolidate. Ideally, the tool would be cloud-based. It would be a cloud-based solution and allow multiple users to simultaneously enter their budget for their specific projects or budget segments. You'll also want a tool that easily integrates data from multiple sources. So say you want to bring in your project data, your employee data, your actual costs from something like Deltek Cost Point, but you also want to bring in your opportunity projects and anything that you're going to forecast as a potential win from Salesforce. So you want to be able to integrate that data and bring it into your budget tool. Businesses should probably look for a tool that can create, like I mentioned before, and analyze unlimited what-if scenarios. An example would be if you're anticipating winning a large contract or you're planning a large expenditure. You want to see the impact on the business as a whole, as well as your indirect rates. But you might not necessarily want this to be part of your official budget or forecast until that final decision has been made or the contract has been won. The ability to quickly load actuals at month end, to be able to compare those to how you're performing against your budget. And then if you see something where you're seeing a large variance or an anomaly, you want to be able to drill into those specific accounts and view the transactional details. I find that to be extremely important. And honestly, it's something I do monthly whenever I do our budget here at NeoSystems. I load the actuals in, I see where we have variances, and then I drill into the transactions to see if either something was charged incorrectly or we need to make some kind of change within the organization. And finally, it's ideal that a tool allows a self-service reporting. So for our tool here, again, at NeoSystems, I like to be able to go in and create my own reports and have our budget preparers be able to self-serve themselves. They can go in, they can view the data, they can create their own reports and view what's relevant to their analysis and their decision-making process.
Great. So, Shonna, can you show us an example of the budgeting tool that we use here at NeoSystems?
Sure. I put some screenshots here. So as Don mentioned, this is the tool we use here at NeoSystems. It's called Workday Adaptive. Obviously, you'll want to choose a tool that's best for your organization, but this is the tool that we use and that we typically will implement for most of our GovCons. This is the tool that they choose. This is just an example of a dashboard. You can easily just drag different charts onto the screen, show your metrics. You can drill into, let's say, if you wanted to see your project data, you can filter on your projects just to see a specific project, or if you want to drill on into, let's say, a business unit or a department, you can drill into that. You can change the periods, so we'll quickly change to see how you're performing. And then also in the dashboard, for this tool specifically, you can load your planning data so you can plan all in one place. So if you have your labor planning and then an analysis report below that, or your direct cost planning and then analysis below that, you can have all that in one place in a dashboard just to make it easy and simple for your users to be able to quickly drill into what they need to see and see the data that's relevant to them. And this is an example of a consolidated utilization plan. So typically, at least for our organization, we're going to enter hours or utilization percentages to build up our labor costs by employee. We're going to assign those employees to specific projects. And then from there, we're going to want to see output. We're either going to want to see the total labor cost by person or by project. In this case, I wanted to see if our employees are utilized and what the utilization percentages are. And we have conditional formatting on that to say if they're above or below a certain percentage, we want that flagged. So we can go back, look at that employee and say, why are they only utilized at 25% or why are they overutilized? And we might need to make changes based on that. But this is a quick way to either drill into a specific project, a specific organization, or even a specific employee to check our utilization and make sure that all of our employees are utilized and not overutilized. And then here is an example of just a quick variance analysis report. For us, again, here at NEO, using Workday Adaptive, we are integrated directly with our ERP, which is Delta Cost Point. As soon as the month closes, we press the button, we integrate the data in. For us, it happens overnight. So when I come in the morning, the data is already there and the actuals are there. So I can run this report, see what my actuals, how they're tracking against my budget. I can change the period. I don't think this one has projects on it, but we do have project level data as well, where I can drill into a project to see how my projects are performing against our budget. It's just a really quick way to see how we're performing and where we need to make changes. You can see here, I think I put a right click there where you can drill into specific data. So for example, here, you can drill into the level, which in Adaptive and other organizations, it would be called like your org or something like that, to see that specific data. if I wanted to click on the number and the actuals to see where that those actuals are coming from, I could click on that actual cost and hit drill into transactions, and it would take me to like the GL details. So I would just see every single transaction that makes up that number. But just a quick snapshot of where we're doing, how I can track it, and see where we need to make changes in our organization.
Great, thank you, Shonna. That's great information. And finally, do you have any takeaways that you'd like to share with our audience to help organizations get started with creating that sound budgeting process that you mentioned earlier?
Yeah. So you can see here, I put some points on the screen just to define your clear goals and objectives. So with a unified data model and streamlined processes, you're going to gain more time to monitor your performance and analyze your trends, and then respond to changing marketing conditions. It's important to define those clear goals and objectives and choose a tool that's best for your business. You don't need to be a mature organization to have a solid budgeting process, but improving the budget process will provide you with better quality data, better, faster decision making, and improved trust in your FP&A.
Great. Thank you, Shauna. That's a great overview of getting started in budgeting. And we do have a few minutes here to take some questions from the audience. We actually had one that came in already, but if you do have a question, you can go ahead and enter that into the Q&A area here within the Zoom window. We can take a few minutes to answer those. Shauna, that one question that's come in is, what is the name of the budget tool that you were referencing earlier?
Oh, the name of the budget tool we were looking at that we use is Workday Adaptive. So it's, I think, Workday Adaptive Insights is the full name. And if you want, we can give you any information you need about that tool. But yeah, it's a Workday product called Adaptive.
Great. We'll pause just a moment here to see if any other questions come in.
So in the last slide, the key takeaways in getting started. I guess, do you have any specific questions about what you need to get started? I mean, a lot of organizations probably have an Excel model that they use for budgeting. If you don't, I would say that might be a good place to start, although we find that with Excel budgeting models, and this is going to go with this next question, which is the most common challenge, is most people use Excel, right? There is no system of truth. So there's multiple models out there, and it's hard to figure out which one's the right one to use, right? And then formulas get broken, and you don't realize that. So then you're going to have incorrect data there. So that's where a lot of people run into challenges. Another challenge that we see internally here at NeoSystems is we have our goals and objectives, and then we have reality, and sometimes those don't match up. So making sure that you're having those conversations with your leadership to make sure you're on the right page there with your goals and objectives as well as reality is very important. So we find that challenging as well.
Okay, we'll take one final call for questions. Okay, looks like there are no additional questions. So again, I wanted to thank you all for attending today. I put Shauna's contact information here on this slide. Please feel free to reach out to her if you have any questions later on, or if you want to reach out to have a discussion about your budgeting process and how we may be able to support you with that. Also, our website address is also listed. So thank you, Shauna. Thanks very much for a great presentation. We also want to thank the National 8A Association for allowing us to be here today. And certainly, of course, want to welcome and thank everyone for being here, taking time out of their day to be here for the presentation. So again, thank you, and we wish you a great afternoon.
Thank you, Dawn and Shauna. We really appreciate your insight on this very important topic. As a reminder, if you'd like to view this webinar again or share with anybody or view some of our past webinars, you can do so on our website. And then we hope to see you next month. Thank you, everyone.